Okay, it is 10:30, so we'll kind of get started with some of our introduction and our housekeeping things today. As people continue to join us, I can see Zoom is still letting some people into the webinar right now, but my name is Scott Cook, and I am the Communications Director here at the South Carolina Department of Consumer Affairs. And as you can see, we're celebrating 50 years as an agency. We were established in 1975 on January 1st. So we will continue to celebrate 50 years throughout 2025. Today we'll be talking about credit reports and scores demystified. So this is kind of our credit reports, what they are, why they matter, and we kind of talk about the scores and a little bit about how they're determined, how they're used, and some things to kind of keep in mind as you want to improve them possibly. And as always, I start with my disclaimer for you. I am not an attorney, so you don't want legal advice from me. So just keep in mind that this presentation is just meant to serve as an overview and an introduction to the topics that we will be discussing today. And I'd like to give a quick roadmap about our presentation, what we'll be covering today. So we'll give you a quick introduction to SCDCA, who we are and what we can do for you. We'll talk about credit reports, give you a quick overview of them. And then we'll talk about what is a credit score and give you some of the basics on how they're calculated, what might affect your scores, and some things you can do to improve them. And of course, we'll get into some credit myths of things that people tell us all the time that just aren't true for the most part. So we'll cover some of those. And then, of course, we always like to give you some free ways to protect your information. And we'll get started here momentarily, but first I want to give you a quick introduction for South Carolina Department of Consumer Affairs. Most people know us through our complaint process. We received about 6,000 complaints last year, the last calendar year. So a lot of people come to us with that. We use a voluntary mediation process whenever there isn't a state agency or somebody that regulates or enforces an issue. So we take those complaints to the business and give them an idea of what you say happened and what you would like to have happen, and we kind of see what might happen with that. Sometimes it's just important to get that information to the right person in a company or a business, and having that, information in front of the right person can go a long ways a lot of times. You can report a scam through our agency. You can go on to consumer.sc.gov and let us know about anything you've seen. You don't have to fall victim to a scam to let us know about it, but all the information we receive kind of helps us know what's going on across the state and helps us get information to other people to hopefully prevent other people from becoming a victim to a scam. And you can report identity theft to our agency as well. We have an identity theft unit that can go through situations with you, see what's happened, what kind of might continue to happen if you don't take certain steps. So they have a little checklist that they go through with folks, and they can kind of walk you through that process and see what you might need to do to minimize potential damage. Some cases they can help you get funds back and help you close out some of those accounts that might be opened in your name. You can background a business on our website. We have a lot of information kind of telling you who may enforce different rules or regulate certain types of businesses on our state. So even if it's not us, you can find those links to that on our website. You can also kind of take a look at the different agents or the different businesses that we regulate and enforce rules and license. And you can also kind of look through some of those complaints that might have been filed with our agency. It'll give you a little bit of a summary of what's happened and what's going on, and it can help you determine if that's a business that you might want to do business with. We also do free presentations, of course, so we go across the state and we do them virtually, and we do a lot of presentations like this on a variety of topics. Identity theft and scams are by far our most requested type of presentations, but we also do things on financial literacy, credit reports and scores, different identity theft situations like I just mentioned, but we have a lot of that information on our website, and you can request those free presentations from us. And we also try our best to get answers to your questions. So you can either shoot us an email or you can give us a call, and we have a live person at our desk who answers those phone calls and can hopefully get you pointed in the right direction if it's something that we're not directly involved in, but we try our best to get you pointed to the person that might be able to help you the best. And of course, everything that I've mentioned is on consumer.sc.gov. And that little how do I button right there in the middle of the screen is a very helpful spot that you can go to, and it's going to give you access to those complaints, backgrounding of business, report identity theft and scams, and those presentations, all those things that I just mentioned a second ago. So now we'll kind of get started into the topic for why you came today. So that's kind of the basics of credit reports and scores. So we'll kind of start with, what are they? What's the difference? So credit report's going to be that kind of reflection of your credit activity. So it's going to be that list of everything that's happened with your credit, what you've done, different accounts that you have, different things that you may have going on actively with that. And then the credit score is going to be that calculation. So it's going to be the number that's going to kind of predict how well you are using your credit, if you're going to pay those bills on times and that type of stuff. And we'll kind of get a little bit more into those two things as we get going. But again, the credit report's going to be that detailed record of how you've managed your credit over time. And the info that's on it, it's going to be a lot of different public records. It's going to be information from your creditors, and they're using it to compile one big list of everything that you've done. So when you're looking at those credit reports, you'll need to check in with Experian, TransUnion, and Equifax, and that will kind of give you a lot of information about your credit history. And some of that information includes, of course, your personal information, like your name, any names that you've used in the past, current and former addresses, your birth date, social security number, and any phone numbers that you've had. I've just looked up mine the other day, and it was kind of interesting going back and seeing all the different addresses that I've used in the past, phone numbers. I know a lot of times, especially when I first moved back to South Carolina after being gone for a few years, I moved back and was using a work address and a work phone number for some of my stuff as I was trying to kind of get settled and get a more permanent place to live. So a lot of those phone numbers were kind of showing up because they were the ones I used when I was applying for, my home loan and things like that. So all of those things should be on your credit report if they're kind of used to apply for different types of accounts and things. It will also list all of your credit accounts, so it should have current and past credit accounts, and it'll include the type, should show the amount or the credit limit that you have on that, the balance, payment history as well, and then it should show if it's opened or closed, and the name of the creditors as well. So it was kind of interesting going through those. You might see, I had a car payment that was on mine that has been a car that I paid off years ago, but it still shows up on that credit report. So I was just looking at it yesterday, and I wanted to go in and double check. I saw that listed and I was like, well, that hasn't been open for a while, but you kind of start looking in that and everything is listed as closed, and it had the amount that that original loan was for, and when I paid it off and all that type of stuff. So all that information will be kind of listed in those reports. And it's also going to give you a lot of information about your public records. So if you have any liens against your home, or if there's been a civil suit or judgment, maybe a bankruptcy, those types of things would show up on your credit report as well. And it's also going to give you a look at inquiries. Hard inquiry would be if you've applied for a line of credit, and that is something that might impact your score depending on what's going on. But if you're applying for credit, that would usually show up. I know yesterday when I looked, I noticed these soft inquiries, and that's when someone else is kind of looking at that. So if there's a business that wants to check your report to see if they want to, lend you money, or in my case, I noticed several different insurance companies were looking at my reports, and that was, they wanted to see if I was a potential customer that they, would want to try to get me onto some of their plans, and that was on there. But those things, when they're doing those little soft inquiries to kind of give you that free approval for their service, those aren't going to affect your credit score. But I did see those, like I said, those little inquiries from some of those insurance companies. And I think some of that was because I did ask my insurance agent to kind of see if they could find me a better rate around. So they probably ran that through several different companies, and that was reflected on my credit report. So that was kind of interesting to see. So how would your credit report be used? Kind of the biggest thing is if you're out kind of looking for those loans or trying to get services. If you're buying a home, they're definitely going to take a look at your credit report before they decide, to give you that loan or something like that. Setting up utility accounts. I just set up a new internet on my home not too long ago. I wasn't happy with the company that I had, so I wanted to change service providers. And they ran my credit report before I was able to actually sign up for their service and get it, installed in my house and all that. So that was kind of one of those times that they, ran that. And they told me that before time too. If you're looking for an apartment or again, like I said a second ago, buying insurance, they ran my credit report when I was kind of interested in different rates of those. But, somebody, if you're looking for an apartment, they may want to run your credit report to see if you can pay that rent every month. And of course, if you're looking for a new credit card or borrowing money, they're going to look at those things as well. And they're just trying to see kind of what you have out there, how much money you may owe to other people, and if you're paying things on time or not. So those are the kind of things that they're going to take a look at when they're looking at your credit reports. So why should you check your credit report? You want to make sure all the information is accurate, complete, and up to date. And it can also help you find signs of identity theft that might be out there. So if you're looking through your reports and you're seeing accounts that maybe you didn't open, or have different addresses and phone numbers and things that you don't recognize, those could all be signs that somebody has your information and they're using them to apply for those lines of credit in your name. So you want to take a look at all of that, make sure things are accurate, make sure they're complete. Like I said, I had some loans that were closed off. I wanted to make sure that they were listed as closed off. So those would be all kinds of different things that you might want to go through and check when you're looking at your credit reports. And again, so what should I check on my credit report? Personal information. So you want to make sure all those social security number, phone number, previous addresses, if it's got a marital status, any of that information, you want to make sure all that is correct and accurate. Account information. So it's going to show you the status of those accounts. So if it's opened or closed, maybe if you've paid late, that would be listed on there. If it's in collections, those might be the type of things that are in there. And it should have the balances, and you want to kind of make sure all of those things are correct. And it would also list the credit limits for those. So it would show, how much you can put on your credit card, those types of things. And if it's got dates, you want to look through all of that, make sure they're all correct, and know that when the last payments were made, and if you've closed it off, the date of those last payments and when you've closed it. And again, you want to look to see if there's any errors. And if you do find errors, you can dispute those. The credit report should give you directions on how to dispute those things. So if you're seeing stuff that isn't right, if it's either dollar amounts or accounts that you didn't open, you want to go ahead and submit those disputes with the credit reporting agencies. And we'll give you a little bit of information on that in a second too. But you might also need to dispute it with the companies that are listed on there. So if you're seeing a certain bank or a certain loan provider or something like that, you would need to let them know as well that you weren't the one that opened that up. And if you're seeing the signs of identity theft, you would want to report that to our agency. And again, our identity theft unit can kind of help walk you through that and make sure that you're disputing those things and then that you're contacting everybody you need to contact, and they'll kind of help you get that identity theft affidavit filed out too. So that way, hopefully you wouldn't be able to be responsible for some of those types of things that might be on there. And kind of the best way to get your credit report, the way that we recommend, is to go through annualcreditreport.com. You'll see the phone number listed on there, and that's going to give you access to Equifax, Experian, and TransUnion. Right now, you can access those once a week for free. It used to be once a year, so that was annualcreditreport.com, why it's called that, but they're now doing that once a week, making that available for you. And we recommend using that site because it's set up to protect you. It's mandated by federal law, so that's kind of the important reason to list that. So they've got federal regulations that guarantee that they're not using your information or taking it and selling it to other companies and things like that. So there are, rules on how they can use that data. So that's kind of why we recommend annualcreditreport.com. And it is kind of important to note that it's not going to taint your credit score. So if you're looking for that information, you might need to go through your bank, your credit card provider. I know both my bank and my credit card company, they're two different ones, but they both have that information on their sites where I can click on that and get that score. But that information is not going to be available on annualcreditreport.com. And what is kind of important too to say that we do recommend going through at least once a year. If you're getting those notices about maybe some kind of security breach or something like that. If you get any of those in the mail or through emails from a company that you do business with, you might want to take a look at it a little bit more frequently than that. When you go to annualcreditreport.com, you can take a look at one of the three major bureaus, or you can take a look at all three at the same time. So that's kind of up to you. When I went through yesterday, I only had time to go through two of them. So I went through two of the three, but it gave me a pretty good idea of what was going on. Everything was looking correct. The third one, I was just kind of doing things while I was quickly doing things between meetings. So I didn't have time to go through that third one, but it's a great tool. Again, it only took me about 10 minutes or so, 10, 15 minutes to go through the ones that I went through. Probably took me a little bit longer because I was dragging my feet about some other stuff and I was checking emails and making phone calls and stuff in between and doing all of that. But, it shouldn't take you that long to do once you've kind of gone through it. And it'd be a great tool to do. And it'll help you out. So now we'll kind of get a little bit into the credit scores and a little bit about them. And they're going to be 3 digits. And they're going to kind of be a way that companies use to predict if you're going to pay your bills on time. So a higher score is usually a sign of, you've used your credit well, and they're going to give you probably better loans, better services, those types of things. And here's kind of our quick example of what those credit scores may range. And again, these are kind of general. This isn't a strict representation of every score range and how every credit score is going to work, because some of them have their own little fluctuations and things, but this is kind of our general idea of how to take a look at that. Anything above 800 is going to be excellent. And then that 300 to 579 is going to be the poor range. So you want to stay out of that, but hopefully you're in that fair, good, or very good range, if not excellent. So just kind of keep those in mind too as you're seeing those. And we're going to give you little quick examples of some of the different types of scores that are out there and kind of how they're used. So the big two are FICO and Vantage. And the scores, again, going to range from 300 and that poor to 850, that excellent range. But it's kind of important to note that FICO is going to be used probably in most everything that you've applied for. It's used in about 90% of credit granting. And there's also multiple FICO scores. So if you're seeing different things out there with different FICO scores, that's perfectly normal. There's different types, and basically it's different companies are using different scores to give you different types of information, and they're looking at different data points. So that might be why they use a different variety of that FICO score. So this kind of gets a little bit more into that. So kind of depending on what kind of credit you're seeing, you might see something different. Auto lenders, in this case, we've got listed there, they use the FICO auto scores, and that's going to be industry specific to what that industry needs. So they're looking at things that they've decided to help determine if somebody's going to pay their car payments on time or not, something like that. And then banks are going to use, for credit cards, they might use that FICO bank card score or the FICO score 8. So just keep in mind, there should be, they should be telling you which type of score they're looking at if you're running a credit score with a company in order to get a loan. So hopefully they're telling you which one they're looking at, and they'll also give you that number that they're seeing on there too. And just keep in mind too that it's completely normal to see different numbers when you're pulling that. And it can vary on a lot of different bases. Might be, based on that subscription that they're using that's tailored to that company's needs. And also they may be kind of looking at things at different times too. So, some of our examples here is if you pulling yours up and you see 726 on your credit card company, but then if you go in and you're trying to get a credit monitoring service, they might give you a different score. And then also, your auto lender may be using something else. So they're going to see, a completely different score. And you'll see they all kind of not terribly far apart from each other. They're generally fairly close, but then, they are going to be slightly different. And, it's also kind of important to point out too that at different times, lenders may be seeing different scores than the one you see. And sometimes it even determines, by what time of the month they're looking at too, and when those scores are. So just kind of keep all of those different things in mind. And now we'll kind of look at what our scores are made of. And this information is coming from FICO. They have a lot of information on their website. So if you're not getting all the details that you want through there, the FICO website does have a great deal of information about all these different points and how they're determining these little different parts of your score. So this is kind of our chart, and we'll go through each one of these individually here, but we'll kind of start with that payment history, since that's kind of that large giant chunk, that 35% that you'll see there on that little circle. So with our payment history, it's going to show you a lot of different types of things. So it's going to look at, what you've done throughout, your credit life. So they'll show you if you've got late payments. They might look at collections or charge off and those big things like bankruptcies, judgment, and liens. It's kind of important to know too that the older the information is, the less it's going to contribute to the score. So the things you're doing currently are probably, adding in there, a little bit stronger than something that happened to you many years back. Most things will kind of stick around on your credit report for about 7 years. Bankruptcy, that big one, is going to be kind of the one that might stay on there for about 10 years for bankruptcy. So just kind of keep that in mind as well. Then they're also going to look at kind of the amounts that you owe and your credit limits. For general, it's kind of best to have several accounts with lower balances than to have fewer accounts that are maxed out. That might be something that a lot of us struggle with sometimes with credit cards and that type of stuff. But they're going to look at that. They're going to see if you have low balances on that type of stuff. And they're looking at the utilization. So that's going to be your balance divided by the credit limit. And that's going to give you that percentage. And they recommend about 10% per account. So if you had a credit card that had a $10,000 limit, keeping it around that 1,000 might be kind of that best practice. But again, sometimes things happen and you might have to kind of adjust that, but that lower than 10% is kind of the recommended amount. And that's going to help you kind of keep that score as high as possible. And just kind of keep in mind too, that the lower the credit utilization, the better. And so you want to be paying off those balances each month, and that's going to kind of give you the best results to get, your scores to improve and to keep those scores high. So paying off that balance each month is going to be kind of the big thing that you can do to impact that. And also your length of credit history. So the longer you maintain those open accounts, the better. So, maybe keep those credit cards open and not close them off all the time. Keep the same ones for an extended amount of period of time. That will help you establish that credit history. And if you're struggling to open up a credit history, or, if you're a younger person and need to get that credit history, or maybe you've had bad history in the past and you need to kind of reestablish that, a secure credit card might be one of the options that you consider. We've got an entire presentation coming up next week on different things you could do to create that credit history, but a secure credit card is one of those tools that might be an option. And basically you're putting money down for that then to be kind of borrowed against on a credit card. So, you might put in $1,000 or something, and then you're kind of borrowing off your own money there and that. So that would be kind of one option, and that might be something that helps you out with that. And if that's the case, you just kind of want to make sure that those secured credit cards are kind of being reported to the credit bureaus, and that will kind of help you get those reports in with them. And it's going to show that you're establishing that credit history and you're paying those bills and you're doing those types of things, and that will kind of help you out get that credit history going. And again, we kind of mentioned the inquiries earlier on, but that's going to add up to about 10% of your credit score. And again, that hard inquiries when a lender, you've applied for that line of credit, and they're going to go through and review your credit report as part of that decision-making process. And it will appear on your credit report, and it can, impact your score. So you don't want to apply for every credit card that's out there and have those hard inquiries, going on. You may want to just go ahead and look at those pre-approval offers and then kind of see, before you put in all those applications. So you do want to shop around, but you may not necessarily want to put in those full-on applications, until you're ready to make that decision and you know what those rates are going to be. And again, kind of those soft inquiries, those are things that are not going to impact your score. And again, that's when the company's checking to see if you're somebody that they want to do business with. So credit card company, or like I said earlier, an insurance company may be kind of checking that credit report to see if they want to give you that pre-approval before you fill out all that paperwork and that type of stuff. So again, those will not impact your score. And you want to keep a mix of your credit. So you might want to look at, having different types of loans. It might be a long-term loan like a car or a mortgage. Revolving accounts would be things like your credit cards. And you might have short-term loans like a personal loan. Again, you want to have a variety of this, and it's going to show that, to those potential creditors that you're low risk if you've got these different variety of things and you're paying all of those on time. We want to give you a quick example of some things that might impact your credit score. And these are going to be kind of those big things, but I think it does kind of give you an example of, how these big moments can potentially impact your score. So with our example that we have here with somebody with pretty good credit, 780 FICO credit score, and then something like not paying that card, 30 days delinquent would be a big hit, 90 to 100 points, 110 points with that one. Something that happens with the mortgage, a charge off or foreclosure, again, that's going to be another big point drop, 140 to 160. So again, it's kind of dropping you pretty quickly with some of that from, being in excellent shape to, potentially fair there. And then of course, the filing of bankruptcy is going to be the big one. That's going to give you a 220, 240 point drop on those. So just kind of keep those type of things in mind. We like to tell people too that, with the credit scores, they all do vary from, company to company, and the companies that are determining those, they keep those formulas and the math that they're using to determine, all the things that impact it. That's considered proprietary information. So the exact methods that they're using to kind of figure out their formulas and how it's impacting you, those things may not quite all be known. So these are kind of estimates. So just kind of keep that in mind too. And know that these things will have a pretty dramatic impact if it's, some of these big life events that would be like that with the delinquency with the bank card or the filing bankruptcy and those types of things. And we always get asked kind of, how do I boost my score? What are the things that I need to do to improve it? And kind of the big thing, pay your bills. That sounds simple, but you want to show that you've got bills and you're able to pay them. That's going to be the biggest thing that you can do to make your credit score go up. And you want to have a long history of good credit. So you want to show that you're paying these things on time. You want to have a mix of those types of credit, like I said earlier, car, mortgage, credit cards, short-term loans, all those different things. They're going to help show a creditor that you're, paying your bills and that you're low risk. And also you kind of want to keep an eye on the amount of applications that you're putting in. So again, you don't want a lot of those hard inquiries on there. So kind of limit those applications to the things that you really need to apply for. And you also want to keep an eye on those credit limits. So keep those balances low if possible. And you want to pay them off each month. If you have those credit cards and things, you want to pay those balances off every month. And that's going to be the best thing you can do to kind of get those scores moving up. Now I kind of want to get into some of those common credit myths that we mentioned at the beginning, and kind of the big ones that we hear from folks sometimes. People might say, checking my credit report will hurt my score. And the fact is, it will not hurt your credit score. And it's an important tool to use. It's going to help you make sure your information is accurate, up to date, and it might help you find the signs of identity theft and fraud that are out there. So checking your credit report will not hurt your score. I only have one credit score. The fact, and we mentioned it earlier, you have multiple credit scores, and it all depends on the scoring model, the type of credit you're seeking, sometimes even the day when it's calculated. I know sometimes if I've traveled, if I look at my score, or I get notifications about my score sometimes from my credit company, and they'll tell me, oh, my score's dropped. And a lot of times it's because I've put a lot of things on my credit card. If I've traveled, gone on vacation or something, a lot of times when I do that, I put everything on the credit card and I pay it off when I get back. But while I'm traveling, if they run that score calculation, it might show a little bit lower score just because I've put a ton of stuff on my credit card while I've traveled. So that's just kind of an important thing to keep in mind while you're out there. Some people will say carrying a balance on my credit cards will improve my credit score. That's not true. Paying off your credit cards in full every month is the best way to improve a credit score and maintain a good one. So that's also, if you're carrying those large balances, that's going to impact, your utilization and all those types of things. So you want to pay off those credit cards in full every month if possible, and that's going to be the best thing you can do to keep your score good. And sometimes people say, I have to pay to get my credit reports. You don't have to. You can go to annualcreditreport.com. Sorry, I just adjusted that there. But you can go to annualcreditreport.com and get a free credit report each week. And that's going to give you Experian, TransUnion, and Equifax if you do that. And our next myth, getting loan estimates from multiple lenders will hurt my credit score. You do want to shop around and find different credit offerings and things like that and compare rates. But you don't want to put in those hard inquiry applications. So you want to do your research before you apply. So that part, it can be true if you're applying for a lot of different things. But you do want to shop around, get those estimates before you put in those applications. So you want maybe get those little pre-approval offers if that's something you can find out. That's not going to impact your credit score, but putting in those applications in full will. So you want to do your research ahead of time and get the best rate that you can, but then apply for it once you know the rates. So do your research before you apply. And then closing credit accounts will improve my credit score. If you close those accounts but hold the same balance and you're using that higher percentage of your total credit limit, that could lower your score. So the example I would say, if you have 2 or 3 credit cards and you've closed one, but then you put all of that debt that was on that one card onto one of those remaining ones, that's going to raise that balance on that one card. And that's going to give you that higher percentage on that limit. So you're using more of that card than you were previously. So you want to keep all of those as low as possible. So if you're putting those high balances onto just one card, that could lower your score. And again, our next little myth, there are only 3 credit reporting companies. Equifax, Experian, TransUnion are the 3 big ones that we mention all the time with the credit bureaus, but there are lots of other companies out there that are kind of doing different types of services. There are specific credit reporting companies that may be helping companies when they're looking to hire somebody. They may be doing tenant screening, like I said, insurance, utilities, all these different types of things. So there are many companies out there. They all should be able to provide you a free copy of your credit report every 12 months if you ask them. So if a company is using a specific credit reporting service, to run that credit report on you, find out who they're using, and then you can request at least one free report from that company every year. And we do like to tell you about some different scams that are out there and just kind of signs that you've probably seen a good bit out there with some of the advertising with stuff, but you just kind of want to keep these things in mind to avoid people who give you these types of promises. The truth is you can dispute errors in your credit reports for free, but you don't need to pay for a credit repair organization to do it. And if you're seeing signs like this, especially, erasing your bad credit guaranteed, that should be a red flag for you. If it's something that you've done and you actually have bad credit, nobody's going to be able to erase that. That's part of your credit history. So if somebody's telling you that they can get rid of these problems, that's the sign of a scam. So here's kind of a quick look at some of our red flags. Again, you want to avoid any of that pressure to pay upfront fees. Simple rule, don't pay upfront. If they're doing a service for you, credit repair, and helping you with that type of stuff, you should be paying them later on. If they're promising to remove all that negative information, beware, because nobody can do that. If it's accurate and it's current, that information is part of your credit history and it's true, it sticks with you. So nobody's going to be able to remove negative information if it's not something that, or if it is something that you have done. And again, if somebody's telling you not to tell your credit reporting companies or your creditors about the service that they're providing you, walk away. And keep in mind too, if you've signed for a credit repair service under federal law, you have the right to cancel that contract within 3 business days at no charge. And of course, we like to give you information to keep you safe, and some of the best tools that you can do would be to consider a security freeze or a fraud alert. So if you're going through your credit reports and you're seeing signs of a scam that's out there, you might want to consider a fraud alert. And a security freeze is going to be a great tool that anybody can take advantage of. And I'm going to give you a little bit more information about those two real quick here. So the fraud alert, again, if you're seeing those signs of potential identity theft, you can put that on there. It's going to last a year initially, but you can extend it beyond that. You just call one of the credit reporting bureaus, Experian, TransUnion, or Equifax. They'll notify the other ones. And basically, they're notifying those creditors that something is going on with your accounts and that they need to take additional steps to verify that it is actually you whenever somebody is applying for lines of credit. So that's going to be a great tool to take. If you're actually out there looking for lines of credit and you're worried about somebody else using your name and your information, that fraud alert's going to kind of put a little bit extra protection in there, so companies have to verify your identity before giving any of those services. The security freeze is a great tool, and I tell people it's one of the best things you can do to protect your information. So basically, you've got to notify Experian, TransUnion, and Equifax. You've got to go through each 3 of them kind of individually. So it does take a little bit longer, but it's free to place. And it's basically going to stop anybody from accessing your credit report. And, somebody's trying to use your information to open new lines of credit, they're not going to be able to. And I tell people, I was a victim of a situation like this where I had a person try to open up a credit card in my name. I got a notice from Experian saying, my credit was frozen, but somebody tried to open up a credit card. They took steps and stopped that from going through since I had my account frozen. So that was a great tool, stopped me from having to deal with that kind of headache. But times that I might need a loan, like what I was saying, I applied for some new internet service. I did have to thaw that freeze. In order to do that, they wanted to run my credit report in order to give me that new internet provider. So I went on to the Experian, TransUnion, the Equifax websites, thawed my freeze. An hour later, that was ready to go. So I was able to go onto that website and run that credit report for the application for that new internet provider. So just kind of keep in mind, if you are looking to use your credit, you will need to thaw it while you're doing that. They would set it up on their website. So, you can put in time constraints. So if you think you're going to be done in a day or 2 looking for that line of credit, or if you need a new car or something like that, you can set those deadlines for when you want that freeze to go back in place. So that's a great tool. And again, it's going to stop other people from using your information if they have it. And whenever you need it, you can just lift that freeze and go on and put in those applications that you need. I always like to remind people too to monitor your statements. So you want to go through those bills. If you have benefits like Medicaid, anything like that, Medicare, you want to go through all those medical financial statements, things like that. Make sure everything's correct and make sure that identity thieves haven't accessed those accounts and using them for some way, shape, or form. So you want to go through all those statements and make sure all those things that are listed on there are things that you've actually done. And then you want to dispute those as quickly as possible with those companies if you're finding errors. And of course, we always encourage you to defend against scams. There's all kinds of crazy stuff out there. You might be getting text, emails, pop-up windows, things like that are asking you to verify financial, personal information. Cases like this, sometimes you might get those messages that say your credit score is dropped or there's some kind of identity theft alert. Just kind of beware before you click on any of those types of things. We always tell people, if you can't verify that the person is who they say they are, don't give them that information. Don't click on any of the links or respond to them. You can always look up messages yourself and contact companies directly if you think it's something that may be legitimate. So if you're getting messages that claim to be from your bank, call those numbers that are on the back of your cards. Those are great ways to get a hold of those companies, or use the apps that you normally use, in order to pay your bills and those types of things. If you're interested in a credit monitoring service, just kind of keep in mind that a lot of times they're doing the things that you can do for yourself for free. So, they're basically looking through your credit reports and that type of stuff. Just kind of keep that in mind. And remember to make sure that the company you're dealing with, if you go through somebody else, that they're trustworthy, reliable, legitimate. You might want to run kind of online searches real quick with the name of their company, make sure they're licensed, those types of things too. And remember too, if you do sign up for a monitoring service, that it doesn't take you out of the picture completely too. You're always kind of responsible for that information, and you're the best tool to, detect identity theft and know what's going on with your information. We always encourage folks to kind of set up those account monitoring tools and do those things you can do to protect your account. Those account alerts are a great thing. You can go through your, debit cards or your credit cards and set up all those different alerts. Maybe it's anytime there's a purchase made, you get a text message, or if your balance goes below a certain dollar amount, or, things like that. You can do those. Login protections, of course, using a strong password, but you also want to use two-factor authentication. So that way you're kind of doubling up your security, and it's going to make it twice as hard for hackers to get into your accounts, even if they get those passwords. So if you're not using two-factor authentication, please set it up on all of your financial accounts, emails, social media, those types of things. This website, people always like it whenever I share this one. It's optoutprescreening.com, and it's basically gonna kind of get you off some of those lists for pre-screened, pre-qualified offers. So if you're getting things in the mail for like insurance and things like that, you can sign up on this site, and it's basically taking you off the list that is provided from the credit bureaus to specific companies that are looking for customers. So those companies are going to the credit bureaus and they're giving them the specifics of kind of who they're looking for, and the credit bureaus running those reports to see if they can find information about potential customers for them. So if you go to this website or call that phone number, you're kind of taking yourself off those lists, and you're telling them not to run those reports about you and get that information out. So that's a great tool you can do to get less of that stuff in the mail. And of course, you can download our credit reports, what they are, why they matter. It is on our website, consumer.sc.gov, and it's going to give you that checklist of different things that you can go through with your credit reports, what to look for. It also gives you some information on kind of how to dispute those things if there's items that are showing up that you don't recognize, things like that. And hopefully we've been able to attach that into the chat box today too, so you can download it. But if not, you can go to consumer.sc.gov, and we have that there as well. And we also have that available for you to order from us. So if you want a physical copy, that is one of the books that we have available too. You can go to consumer.sc.gov, and we have a little button there where you can find publications and request those. So if a group that you're working with, if your church, library, school, whatever type of community group that you're involved in, you can get that credit report guide, and we mail up to 50 out to you. And we also have our Ditch the Pitch, which is our scam prevention guide, and our identity theft prevention guide as well. So any of those are available on our website for you. And as I mentioned, our upcoming webinar next week will be how to start building credit. That'll be next week at 10:30. All of our Wednesday webinars are at 10:30 generally. Every now and then we'll have one in the afternoon, but most of them are on 10:30. Week after that, we'll be talking about cybersecurity in 4 simple steps. That's some information that the FBI and Homeland Security and some other cybersecurity experts have their tools that they recommend that people do to protect their devices and protect their information. And then on April 30th, we'll be going through with our advocacy division. They'll be kind of doing this presentation on understanding your electric bills. So they'll be looking at all the various things that are on your electric bills, potentially, depending on who you use. And they'll kind of explain what the different charges and things that you see that are on there, kind of what they are and why they're there. And they'll kind of walk you through that process as well. So that will be April 30th at 10:30 a.m. And if you don't follow us on social media, I encourage you to. We're Facebook, X, Instagram, and of course on YouTube. We have a lot of recordings of our presentations there. So if there's something that you've missed, or if you just want that information again, SCDCA TV on YouTube is a great tool and resource to go to. And I'm gonna try to see if I can get into our chat box here to see if anybody has put anything in. If you have not, hopefully you can go in there and take a look at the slides that we've put in there. See somebody raised their hand. If you can put whatever your question is in the chat box or in the little Q&A box, either one of those should pop up in my thing, but I see somebody had their hand raised. So if they can put that question in there, we'll get to you. And as we kind of wait on that, I'm going to go ahead and put up my contact information. I think I just advanced. Sorry about that. But if you have any questions or anything that comes up later, we'll try to get you the best answers we can to a lot of those. You can go to consumer.sc.gov, and you can also email me or call me. Those are my contacts right there that you'll see on the screen. And if you need anything, by all means, please let us know if there's additional questions that you might have. Somebody asked, can you confirm that loans affect your credit reports? Any loans that you have should be listed on your credit report. So it would show, like when I looked up mine yesterday, it does have, my car loan, my home loan, those types of stuff. It is all listed in there, and it should show when it was opened, how much money remains, kind of what your monthly payment is on there too. That's kind of good to know too, because I always look at mine, like, what does it list for my home and my car for those monthly payments? You want to make sure that those are listed properly too, because that's all important information. If somebody's looking at what you're making and how much loans you have out there, they'll take a look at that. And again, all of those things are kind of made up on that report, and then they're using those details to determine that score. So they're whenever they're looking at that type of information, they'll be using those details to kind of predict your score. And if you're paying those bills on time, you should be good. You'll have that higher score. But if you're missing payments and things like that, it will drop that score. So all those things are kind of being considered whenever you're putting in any of those applications and things like that. I know somebody else asked about the presentation. We just dropped that back in the box too. So you should be seeing that in the little chat box if you can. And if you're not seeing those, we can email those out to you. You can either reply to the public information email that was sent out with the notification about the webinar, and we can reply to that with the slides as well. So if you don't have my email address, we'll get you those. We'll also kind of keep an eye out on the chat box here too. But I think we will be kind of wrapping up here, but I do appreciate you guys for joining us this week. And again, we do Wednesday webinars every week at 10:30. So encourage you to join us in another presentation. And of course, we have a lot of those too, like I mentioned, on YouTube. So if there's any presentations you aren't able to join, feel free to watch them. Usually we get them up the next day or later that same afternoon, sometimes depending on the day. So if it's not up that afternoon on YouTube, we'll get it up the next day, generally speaking. But I appreciate you guys for joining us, and I hope you will join us again from another one of our Wednesday webinars. And we appreciate you. Thank you, and have a good day.